Welcome. This discussion today has been kindly arranged by my tax accountant. We're going to be talking about something that's generated quite a bit of buzz, maybe a little unease too, here in the UK. That's the DWP's new powers for bank account checks.
That's right. If you're a UK taxpayer, and especially if you receive benefits, you've probably heard whispers about this.
Yeah.
And it's natural to wonder what it really means for your financial information.
Absolutely. So our aim today is to, well, cut through some of that noise. We want to get really clear on what these powers actually involve for you based on the latest reliable information we have.
Okay, so let's start with what these powers actually are. They come from recent legislation, the Fraud, Error, and Debt Bill, and also some tweaks to the Data Protection and Digital Information Bill. What they essentially allow the DWP, the Department for Work and Pensions, to do is request limited data from banks.
Right, and this seems like a really crucial point. It's not DWP getting sort of direct access to your bank account login. They're not tracking every coffee you buy, that kind of thing. The banks are the ones spotting specific signals or patterns.
Exactly. And the big change, the real shift from the older powers under the 1992 Social Security Administration Act is about scale. Before, the DWP generally needed a specific suspicion about someone to check their account. These new powers allow data requests on a much, much bigger scale without needing that specific suspicion first. That's the key difference everyone's talking about.
Okay, so why now? What's the driver behind this?
Well, the sources point pretty clearly to the cost of benefit fraud and errors. For the 2023-2024 financial year, that cost was estimated at a staggering $9.8 billion.
Wow, 9.8 billion.
Yeah, and that breaks down into about 7.4 billion from fraud and 1.6 billion from claim and error. Mistakes, essentially.
So with figures like that, the government's looking to tighten things up.
Precisely. These powers are projected to save around 1.6 billion hours over the next 5 years. That's the hope, anyway, by catching issues earlier.
Got it. So who exactly should be, well, aware of this? Who's potentially affected?
It's mainly people claiming means-tested benefits. So think universal credit, pension credit, employment and support allowance, ESA. The information suggests this could potentially touch on data linked to maybe 9 million accounts.
Okay, but important point. The basic state pension is definitely excluded, right?
Correct. That's not part of this. However, low-income pensioners who get pension credit are included, and people with disabilities claiming benefits like ESA are also covered.
And what about self-employed people, business owners?
Yes, definitely need to be aware. The DWP can use this to cross-reference money coming into your bank account with the earnings you're reporting, both to the DWP itself and also potentially comparing with HMRC records.
Right. So that leads to the practical bit. What kind of signals are the banks actually programmed to look for? What triggers a check?
There are a few main ones highlighted. Probably the most obvious is having excess savings. So if your balance stays consistently over the capital limit for your benefit, that's £16,000 for UC and ES, £10,000 for pension credit.
And that includes joint accounts, too.
Yes, that limit usually applies to joint accounts as well. Another signal is foreign transactions. Lots of regular payments or withdrawals overseas might suggest someone isn't actually resident in the UK, which is usually a condition for benefits.
Okay, makes sense. And undeclared income, especially for the self-employed.
That's a big one. If deposits are hitting your account that just don't seem to match up with the earnings you've told the DWP about, that's likely to raise a flag.
And what about just sort of unusual patterns?
Yeah, inconsistent patterns, maybe a sudden large deposit, an inheritance perhaps, or a big payment for a business. It might not be fraud, but it could trigger a review just because it's outside your normal financial activity.
So the DWP has this risk intelligence service, the RIS, using algorithms. But it's not just computers making decisions.
No, definitely not. The sources stress that human review is required before any action is taken on a claim. But of course, this does raise that concern about false positives.
Right.
Innocent people getting flagged by mistake due to a perfectly legitimate but unusual transaction.
So how does it actually work day to day? The process.
Banks use their automated systems to spot these signals. They then pass limited information again, not your full statements, over to the DWP. Then trained DWP staff manually look into the cases that have been flagged up.
Okay. So knowing all that, what can people actually do? What are the practical steps? Let's maybe run through a kind of checklist.
Good idea. First off, report changes quickly. If your income or savings change significantly or you travel abroad for a while, tell the DWP, usually within a month. You can use their online system or call them.
And keep good records. That seems vital.
Absolutely critical. Bank statements, invoices if you're self-employed, pay slips. Keep at least 12 months worth. And if you run your own business, using accounting software makes tracking income and expenses so much clearer. It's really invaluable here.
You also need to understand the rules for your specific benefit, right?
Yes, know the capital limits, know the income rules. Like with universal credit, there's that taper if your savings are between £6,000 and £16,000. Knowing those details helps you stay compliant.
What about separating accounts? Is that a good idea?
It can be, yeah. Especially if you're self-employed, keep business and personal money separate. It avoids confusion. Same potentially if you manage specific funds, like disability-related care payments. A separate account makes things much clearer.
And if the DWP does get in touch?
Respond promptly. Answer letters. Attend interviews if asked. Stick to their deadlines, usually about 14 days, and provide clear evidence to explain your situation.
Okay. And it's worth remembering, people still have rights, don't they?
Absolutely. You have privacy rights under the Human Rights Act. These checks have to be lawful, necessary, and proportionate. They can't just be fishing expeditions.
And data protection laws, GDPR, the Data Protection Act, they limit what data can be asked for and demand it's handled securely.
Yes. You generally have a right to be informed if your data is checked, unless telling you might compromise an investigation.
And importantly, if you disagree with a DWP decision,
You can challenge it. First step is mandatory reconsideration and internal review. You need to ask for that within 1 month. If you're still not satisfied, you can appeal to an independent tribunal. And interestingly, the sources mentioned a success rate of about 65% for UC appeals at tribunal in 2023-24.
that's quite high. Suggests it's worth appealing if you think a mistake's been made.
It certainly suggests the initial decision isn't always final. And there are safeguards, oversight bodies like the Information Commissioner's Office, and a code of practice being developed.
Okay. But it still sounds quite complex to navigate, especially, perhaps, for self-employed business owners juggling DWP and HMRC reporting. We saw a figure mention something like 1 in 10 self-employed UC claimants flagged for income discrepancies in 2024.
Yes, it highlights that potential for confusion or mismatch. And this is exactly where getting some professional help can be, well, really beneficial. A tax accountant understands both sides, the tax rules and the benefit rules. They can help bridge that gap.
Yeah, I can see that. Like the scenario we saw mentioned, a self-employed person gets a big, legitimate client payment. It's all above board, but it temporarily pushes their balance over the savings limit and triggers a flag.
Exactly that kind of situation. An accountant can help proactively. They can review your finances, spot potential issues before they happen. They can help make sure your reporting to DWP and HMRC aligns, preventing those kinds of flags.
And if a query does come from the DWP,
They can help you gather the right evidence, present it clearly, maybe even liaise with the DWP for you. They can also advise on structuring things better, like those separate accounts we talked about. And if it comes to it, they can support you through an appeal.
so it's not just about tax returns. It's about peace of mind, saving time, avoiding potential benefit suspensions, or even HMRC issues if things don't match up.
Absolutely. So, to sum up, yes, these powers are real. The checks are happening more often. But understanding the rules for your situation and being organized is key.
It definitely seems like navigating this landscape can feel a bit daunting, though, especially for taxpayers or business owners with multiple things to report.
Which is why getting professional advice might be a really sensible step. It can ease that burden, make sure you're compliant without the stress.
And on that note, for anyone needing assistance with these kinds of matters, we do recommend contacting my tax accountant.
They're experts in this area and can help you understand how these rules apply to your specific circumstances, ensuring everything is set up and reported correctly.
And my tax accountant is actually offering a free initial consultation specifically on these concerns. You can speak directly with their CEO, Mr. Maz.
To arrange that, you can visit the My Tax Accountant website or just give your team a call on 020-8123-4567.
So, thinking about this balance the sources touch on between fighting fraud, which is understandable, and protecting privacy, it does leave you wondering, doesn't it? When systems increasingly rely on algorithms to spot issues, how do we make absolutely sure the system remains fair and trustworthy for everyone, even when those algorithms inevitably sometimes get it wrong? Something to think about.